Welcome back. I'm Michael Bull, and this is America's Commercial Real Estate Show. Hey, if you haven't checked it out, check out getvaluate.com. You can easily share numbers on investment properties with your colleagues online at getvaluate.com. Well, today we have Brian Bailey here. He's with the Federal Reserve, the Bank of Atlanta, and he's their real estate guy. And Brian, I want to ask you about Dodd-Frank, Basel III, the impact of all that, the tax reform coming up, what could happen there, especially a lot of people are concerned about the 1031 exchange. But before we go there, a lot of people are concerned about retail. What else should we think about related to retail today?
Well, I mean, there is some, we hear a lot of negative press, but there is some positive press. We broke out retail sales growth by the e-commerce providers and by traditional bricks and mortar, such as Home Depot, such as Walmart, retailers. And the great news is that the growth rate is positive for both groups. Yeah. You're hearing a lot about the retailers that are struggling right now, but all in all, the overall number, even though it's growing for the e-commerce providers by a factor of 4, so it's growing at 13 or 14% compared to traditional bricks and mortar around 2 to 3%. So it's growing much faster for e-commerce, but e-commerce is a much smaller portion of the pie. Yeah. But I think it's growing. Let's just go to traditional retailers, and that excludes the food sales. Retail sales are up 2 or 3%, depending on the timing of the snapshot. Certainly, that's good dynamic. Yeah. But we're becoming much more efficient with the use of space. And that's where you're seeing this kind of compression pressure on the retailers. The other part is, you look at it, arguably we have a significant amount of retail space. Yeah. And we probably have too much in some respects. If you look at the United States has 24 square feet per person. That's a pretty significant number of square feet. You look at Canada, it's 15 feet. You look at Australia, it's 10, and then you get down to the Western European countries where it ranges from 5 to 7 feet. And the one that is amazing to me is China at 1 foot, 1 square foot of retail space per person. Yeah. So certainly, we're seeing this dynamic where sales are growing, but obviously a portion is being siphoned off by the e-commerce providers as they change our buying habits, the consumers' buying habits. Same time, we had a lot of space to begin with. And so I think that, those dynamics are putting, some of that pressure on, the retailers, and unfortunately, H.H. Gregg and Sports Authority and True Religion, and so and even we've seen a couple of small grocery store chains go out in the Midwest, and so really, the dynamic is really shifting, I think, in some respects. Yeah. I think bad news to see it change, but evolution really occurs naturally. And so there's an opportunity to rehabilitate and reposition some of this space. Yeah. And so you see, retailers with an experiential focus that are coming in and do pretty well. You're seeing some of the space being used for healthcare purposes, and that's also doing pretty well. And then you're seeing, call centers, and you're seeing civic organizations, governments taking over some of the space as well. So certainly it's not easy to reposition the space, but there is an opportunity to do that. And I believe that, that's an area for the lenders that they may be able to capitalize on if they have that expertise. Yeah.
Well, that's a good point, that there are positive numbers in the sales growth. I mean, if you look at the stock market, how well the stock markets have been doing, home values. So I think in America, if our home values going up, our stock market values are looking good, we'll go out and spend, right?
Well, certainly the home value is a significant driver of consumer sentiment. If I feel like my asset is growing, I'm more apt to go spend more money which is certainly good for retailing, which is certainly good for the business cycle.
Yeah.
So it's good for commercial real estate.
Well, let's talk about bank reform, because I think, especially if you're in a small market around America, the community bank, the local banks are really important to business in those markets. And it seems like some of the banks were concerned about Dodd-Frank, about Basel III. And so where are we there? What do you see moving forward?
Really, and it's a very valid question, because there have been a lot of questions about the potential for too much regulation, and really Brian Bailey's view is that the pendulum kind of has hit the apex. The regulatory pendulum has hit the apex, and we're beginning to see it begin to swing back. Certainly, I don't know how a lot of the pending legislation is going to turn out, and really don't want to comment on it, because there's such a high degree that it will change. So really, comments at this point wouldn't be terribly accurate. Mm-hmm. But certainly, I think that there is kind of this view that the apex, the regulatory pendulum has hit the apex, and we'll see it begin to swing back a little ways. Probably means a little bit less regulation, probably targeted at some of the smaller banks. So probably some relief there. But again, still too early.
And are the larger banks and the smaller banks, or should they be regulated differently? And are they?
Well, certainly, I mean, all banks are important to us. Sure. Very important to us. But obviously, the larger institutions are designated as, systematically important.
Yeah. Too big to fail.
Yeah. So I think that we're trying to be aware, and our mandate is the safety and soundness of the financial system. Mm-hmm. And so it includes the small, it includes the large banks, and we're trying to, we're not trying, we are in those banks, we're diligently looking at what they're doing.
Yeah, well, it looks like I just saw a report in the Atlanta Business Chronicle that the banks in Georgia have been doing really well. And so are banks around the country doing okay? Yeah.
The health of banking in general has picked up significantly from what we saw in 2010, and certainly Georgia and Florida are near and dear to our heart, because these were the top two states with the most bank failures. And so the CRE dynamic attributed a lot, residential and commercial real estate dynamics attributed to that. So we're diligently focused on making sure that does not reoccur.
Yeah, we're talking with Brian Bailey with the Federal Reserve, the Atlanta Bank, and a lot of people, Brian, are concerned about potential tax reform, and I think one of the largest potential tax reform that scares people that understand 1031 exchanges and the economic impact in commercial real estate especially are real concerned about that. What do you think the chances are of the 1031 being dramatically changed or gone away with, and the potential impact to the economy?
Right. Still too early for me to comment directly on how the legislation will turn out. But hypothetically, if there was, let's talk about 1031. 1031 allows a tax-free sale of a property, and those proceeds are moved to a pending, future purchase within timeline and certain regulatory. Certainly, if that is significantly altered, so you weren't allowed to do tax-free, then obviously people are going to have to pay more taxes, which may mean that they can buy less lower dollar value assets may become in vogue versus higher dollar assets. Certainly, it's a question. I think the other thing you have to look at is the 1031 is instrumental in the net lease sale market right now. Yeah. And if there was a significant shift there, what you probably see, hypothetically speaking, hypothetically, it's all hypothetical, but you see cap rates move up pretty significantly, which would mean the value of that asset class probably comes down. And certainly we know that some of the banks have been lending in that space. Yeah. And they need to be thinking about what's their concentration look like, what's their exposure to that. Not saying it's going to happen, but I think that they need to think about it.
Yeah, I think the 1031 exchange is a big deal to the economy. It's a big deal to commercial real estate. You know, when you think about the folks that we talk to, that we sell commercial real estate in our shop every day, and I would say, gosh, it's 50-60% of them are doing 1031 exchanges, and if they weren't, I don't think they'd be moving the property. So
Right.
the attorneys wouldn't make the money. The construction folks, you know, there's a long line of people that their income just drops.
Well, and that's a good point. Certainly that has changes for employment tied to 1031. You know, one of the things we didn't talk about is there's a study done, I can't think of one of the gentlemen's names, but the other one is Professor David Ling from the University of Florida, where they went and did a lot of analysis on those tax-free exchanges. And there were certain parts of the country that utilize those exchanges more than others.
Yeah.
And so, you know, if you see a shift, not only, you know, is it kind of national in the impact, but it could have, you know, local implications. You know, there could be pockets that have pretty dynamic shifts.
Yeah. Anything else about what's going on in the government or with Trump's plans, or anything you kind of see that could be a headwind or maybe help commercial real estate moving forward, Brian?
Wow. So I need an easier question, please. We could go for 2 or 3 hours, right? Drop of a hat. Yeah. But I think, you know, let's look at it. I mean, you know, certainly, you know, there's some talk around immigration right now. And I'm not going to get into the legislation, but at the big picture, you know, immigration is a significant population growth dynamic. It also, you know, provides workers in certain areas that there is a shortage of workers, and so it does fill a need. Yeah. And so, if it changes, we need to figure out, you know, how do we adjust? How do those needs get filled? I think, you know, you look at you know, another one that's been a pretty significant tailwind for commercial real estate is the EB-5 legislation. And certainly that's brought some capital in, which helped move asset values. You know, I believe it's up for debate here in a little while, and I'm not sure how it will turn out. But certainly that has been a benefit toward, you know, the expansion in this cycle of the economy. I think, you know, you're looking at technology, and technology is you know, maybe not quite, you know, a regulatory or a legislative piece, but it does have implications. I mean, look at self-driving cars and look at the potential implications on how that changes development. I mean, if you can send your car to a lower density, lower cost location than these large downtown located office buildings, you know, certainly that's beneficial for the developer. It's beneficial for the employee. You know, beneficial for a number of standpoints. But also we have to figure out, you know, what is that? How does that shift the thinking on future developments?
Well, when you're looking at commercial real estate and you're kind of taking that look all over the country, you know, what do you think about the potential for the interest deduction write-off if that maybe was gone hypothetically? What's that do to the banks?
Boy,
and commercial real estate?
you're really giving me the easy questions right now. I mean, I think it's still really early to even speculate on.
How about infrastructure? I mean, if we get a lot of infrastructure spending, that's a boom, right?
Infrastructure is historically good for not only the economy but for commercial real estate. And so, yes, if there's more infrastructure spending, I think it would be, you know, would benefit both areas.
Yeah, and then if Trump gets his way, buy America, hire America, does that help? You know, the banks and U.S. real estate, right? Or does it?
I think, you know, kind of just taking a step back, and certainly if we are creating more jobs, period, that is good for the economy. Whether they're office jobs, whether they're manufacturing, you know, certainly, you know, my understanding is that's been a pretty good tailwind for the light manufacturing segment. Yeah. So I think that, you know, more jobs certainly helps.
Yeah, yeah. Well, Brian, excellent information as usual. Thanks for joining us on the show.
Thank you for having me. I appreciate it.
And thank you for joining us around the country or on iTunes or YouTube or the show website. We appreciate you being with us. And until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show.